welcome back. You're watching Startup Street. Now, Pilgrim, a beauty and personal care brand, has raised $20 million in Series C funding round to increase brand building, R&D and bolstering offline expansion within India. Now, my colleague Aishwarya Anand caught up with the company to find out more about their story.
India's $25 billion beauty and personal care market is constantly getting a makeover. And the stylists are new age D2C brands who are online first, making buying off the shelf passé. Born in the middle of the pandemic, Pilgrim is adding another shade to the palette. The beauty and personal care startup is offering Indian consumers a wide range of products curated with ingredients from France, Korea, Spain, Australia, the Amazon rainforest and Swiss glaciers.
The brand was launched right in the middle of pandemic in May 2020, and we've seen an excellent growth in the last 3 years. What Pilgrim offers as a brand is international natural beauty ingredients which are high on efficacy, so fairly differentiated from the regular offering what you see in the market.
A testament to Pilgrim's strategy is the $20 million investment that's flown in its Series B funding round led by Vertex Ventures Southeast Asia and India, Fireside Ventures and Narottam Saraya Family Office.
One of our key thrust areas is innovation and R&D as a brand, and hence we will double down on our investments on the R&D front with this new round of funding. Currently, while we have one R&D facility which is announced, we work very closely with close to a dozen odd R&D facilities globally. These are our suppliers and partners, and we intend to continue working with them very, very closely like in the past.
The homegrown brand offers over 90 SKUs across face care, hair care, skin care products and fragrances in over 25,000 pin codes. It plans to expand the products range to 150 SKUs in the next 15 months. Pilgrim started as a digital-first brand but is now looking to grow its offline presence. Currently, 8% of the sales come from offline channels, the rest from marketplaces and their own website.
We've recently also ventured into offline. Currently, we are in 300 beauty advisor doors. This, by the end of this calendar year, by December 2023 itself, we expect to be in more than 500 doors. And by the end of next calendar year, December 2024, we expect to be in more than 1,000 beauty advisor doors. We are also launching our exclusive brand outlets. So by the end of this calendar year itself, we'll have at least 5 to 6 brand outlets across malls and airports. 40% of the revenues come from our website. Around 50% come from marketplaces and another 10% come from offline. However, going forward, we think that offline will contribute more and more to the revenue mix.
In August, the startup clocked around Rs 26 crores in revenue and its annual recurring revenue stands at Rs 300 crore. The brand is eyeing scaling to Rs 1,000 crore ARR by 2025.
Whether it is a website, whether it is a offline, or our marketplaces, we are profitable across almost every single channel. A large majority of our sales come from women, so 70 to 80% of our sales come from women. Our Bharat share is fairly high, so the metros contribute close to 40% of our revenues, but a large chunk of our revenues, around 60%, comes from non-metros.
Despite a funding winter, D2C has remained among the top 5 sectors in terms of investment in H1 2023. The sector witnessed about 3 times more funding than in the past 6 months, with companies raising $981 million compared to $333 million in the previous half-year period, as per a report by PwC India. However, the beauty market in India is currently under-penetrated. On a per capita basis, spending on beauty and personal care stands at $14 in the country compared to $313 in the US and $38 in China. Online commerce will become a significant channel for this industry and the BPC sector is projected to touch $30 billion by 2027. This is Aishwarya Anand for CNBC TV 18.